Hi there, Jessica Hawkins here with JH Insurance and Farmers Insurance. If you own a business, small or large, then you have a general liability policy just to operate that business. It's really important for you to know how your general liability is being rated because this makes up the pricing about 90% of the time. Usually, general liability is rated on three things. One is your estimated revenue for the upcoming year, two is your payroll, and three is your subcontractor costs if that's applicable to your business. It's imperative that you get as close as possible when estimating these numbers so that you are not shocked or impacted by an audit at the end of the year. Most carriers will audit your policy, which all that means is comparing the true numbers that happened throughout the year to the numbers that we estimated at the beginning of the policy. Now, if you underestimate, the carrier will ask for that number in full after you've already paid, shortly after the renewal of your policy. If you underestimate, you want to be careful because not every carrier will pay that money back, even though you've paid more than you actually used. That's why it's imperative to have an agent who you can talk to about these things to make sure that your carrier gives that as an option if that's how you estimate your numbers for the policy term. Lastly, rate per thousand is the most important thing to know about your general liability policy. You're being charged a certain rate, a certain number per $1,000 of coverage. This means that whichever carrier has the lowest rate per thousand, no matter what numbers you plug in, that policy is going to be the best price for you. It's really important for you to know how your general liability is being rated because this makes up the pricing, about 90% of the pricing. If you overestimate this number, carriers will not always give that premium back. If you own a business, small or large, then it's really important for you to know your general revenue for the year. If you like to talk, additionally, lastly and most important when comparing liability policies, you want to look at the rate that's being charged per thousand. You want to look at the rate that's being charged per thousand, rates being charged per thousand, because when you compare company to company or even agent to agent, all that matters is the rate per thousand. If the rate is lower, then whatever numbers you plug in are always going to be lower.